Your business identity is everything from what customers see to the paperwork they never do. Northwest is your one-stop business resource. Build your business identity fast with access to thousands of free resources, forms, and step-by-step guides. No account required. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit northwestregisteredagent.com/OFD-free and start building something amazing. Get more with Northwest Registered Agent at northwestregisteredagent.com/OFD-free.
Well, I was down on my last dollar, then I started saving because the bank said fiscal restraint is what you're craving. So I put my earnings in a high yield account, let the savings compound and the interest mount. I'm optimizing cash flow, putting debt in check. Now time is my friend and not a pain in the neck. And we've got a little cash to rebuild the old deck.
Boring money moves make kind of lame songs, but they sound pretty sweet to your wallet. PNC Bank, brilliantly boring since 1865.
This is Optimal Finance Daily, 4 Common Mistakes That Investors Make by Tony with MoneyMiniBlog.com. Investing is not a science. It's not possible to put your portfolio on autopilot and just watch your money grow. There's no one fixed guaranteed path that leads to investment success. However, there are certain paths that will lead to guaranteed failure. Before you know what to do, you must first know what not to do. I'm going to go over 4 common mistakes investors make. Number 1, buying on the dip all the time. Do you know why just buy the dip is the favorite strategy of every passive investor? Because it's easy. There's zero judgment involved and you don't have to use your brain at all. The stock price falls and you just buy the dip. People love to say just buy the dip because A, it makes them sound like investment gurus as if they know a secret, just buy the dip, that others don't. And B, it works sometimes. Now, buying on the dip isn't wrong. It's the best way to make money in a bull market. Like Warren Buffett said, most of his money was made by being right and sitting tight. Don't trade in and out of a bull market in stocks. When the multi-year trend is upwards, buying the dip means that you hold stocks as the general market goes up. In other words, buy the dip is profitable if the market is going up. However, you cannot buy the dip all the time. Doing so is just being plain old lazy. What happens if the market enters into a prolonged bear market? People who just buy the dip will get their behinds handed to them. Let me give you an example. The US stock market was doing great in the first half of 2007. By November 2007, the stock market had already started falling. And of course, some investors were all over themselves buying the dip. Well, you know what happened next? The stock market crashed for a year and a half. Of course, all these buy the dip investors magically became long-term investors who didn't care if they fell or rose. Well, it took over 5 years until the stock market reached the price level at which these investors had bought the dip. Imagine that, 5 years of making $0. And that's assuming they didn't sell their stock at the bottom of the market crash in 2009. You cannot blindly invest and pray for the best. Investing still requires some judgment. And for those who just want to buy the dip, you need to know if the market is still in a long-term bull market or if it's about to enter a bear market. Number 2, listening to the gurus. I'm no guru, nor do I pretend to be one. I'm just a trader, that's it. A lot of people want to sound like geniuses, so they go on CNBC and start sprouting investment ideas off the top of their head. The reality is that a lot of these gurus are just scams. Gurus start sprouting all over the place when the market is in a bubble. After all, everyone who's buying stocks is making money in a bubble. The track record of these gurus has nothing to do with their brains, but everything to do with the stock market as a whole. A rising tide lifts all boats. Tips from gurus work great because all stock prices are rising until the stock market falls. The funny thing is that these gurus don't listen to their own advice. If they did, they wouldn't be talking to the media. They'd start an investment management firm themselves and become billionaires. Number 3, being unable to distinguish between investing and gambling. I know that there's a certain thrill when you send in an order to buy X number of shares of a certain stock. There's always a rush of adrenaline that's associated with investing. The problem with many investors is that they invest for excitement. There's a crucial difference between investing and gambling. Investing requires cold, hard, logical analysis. There's supposed to be no excitement to a rational, logical investment decision. You're investing to make money, not for the thrill of investing. Gambling does not incorporate logic. And number 4, buying penny stocks. Penny stocks are the worst things that you can possibly invest in. Yeah, I know that a lot of penny stocks promise 1,000% returns in 2 days, but let's get serious here. What are the odds of that happening? 1 in a million? Most penny stocks are just fly-by-night operations that don't even have a serious business model. Like I said, investing requires rational, logical analysis. Do not gamble. Investing in penny stocks is the same as playing the slot machine. Final words. Beware of these mistakes the next time you invest. The key to profitable investing is to not lose money. If you lose 50% of your money, you'll need to make 100% return just to break even. Avoid these deadly mistakes at all costs. You just listened to the post titled 4 Common Mistakes That Investors Make by Tony with MoneyMiniBlog.com.
So good, so good, so good.
Score holiday gifts everyone wants for way less at your Nordstrom Rack store. Save on UGG, Nike, Rag & Bone, Vince, Frame, Kurt Geiger London, and more.
Because there's always something new.
I'm giving all the gifts this year with that extra 5% off when I use my Nordstrom credit card. Santa who?
Join the Nordy Club at Nordstrom Rack to unlock our best deals. It's easy. Big gifts, big perks. That's why you rack.
Introducing your new Dell PC, powered by the Intel Core Ultra processor. It helps you handle a lot, even when your holiday to-do list gets to be a lot. Because it's built with all-day battery, plus powerful AI features that help you do it all with ease. From editing images, to drafting emails, to summarizing large documents, to multitasking. So you can organize your holiday shopping, and make custom holiday decor, and search for great holiday deals, and respond to holiday requests and customer questions and customers requesting custom things, and plan the perfect holiday dinner for vegans, vegetarians, pescatarians, and Uncle Mike's carnivore diet. Luckily, you can get a PC that helps you do it all faster, so you can get it all done. That's the power of a Dell PC with Intel inside, backed by Dell's price match guarantee. Get yours today at Dell.com/holiday. Terms and conditions apply. See Dell.com for details.
Because I talk about money every day, some people assume I'm some kind of savvy investor who's skilled at stock picking, trading, and beating the market. But the truth is that I'm the laziest investor you will ever meet, and I spend no time at all managing my portfolio. The main reason is I'm just not interested. I'm interested in money management, earning money, the psychology around money, and the freedom it creates in my life. But the idea of researching companies to do stock picking sounds like a big snooze fest to me. And here's the thing, personal finance is personal. If you enjoy stock picking, then take 5 to 10% of your portfolio and go have fun. As long as you aren't risking your life savings, I don't see an issue with it. But I want to remind the lazy investors like me that you're just fine with an index fund and chill strategy. The goal of investing isn't to beat the market or inch out an extra 1 to 2% of a return. It's to reach a financial goal over time with the power of compound interest. I think active investing in the stock market doesn't interest me much because so much of the results are out of my control. The stock market is like a roller coaster, and the large majority of predictions made about the ups and downs end up being wildly incorrect. I like to focus on the aspects of my finances that I can control, like increasing the gap between my income and expenses. In my highest earning years, I was investing 60% of my income. My savings rate is where I can have the most impact, not my investment returns. And that should do it for today. Have a happy rest of your day, and I'll see you on the Sunday show tomorrow, where optimal life awaits.